The Dow Jones just hit a brand new all-time record. The Nasdaq fell over 1%. And tonight, after the ASX closes, the new head of the United States Federal Reserve steps up to a microphone for the very first time. Welcome to the most complicated morning brief of the year. Let's run the numbers from Tuesday's session. The Dow Jones added 0.78%, pushing to a fresh record high. The S&P 500 edged up just 0.13%. The Nasdaq gave back 1.1%, a sharp reversal after Monday's 3% surge. The Russell 2000, your small-cap index, was actually the day's best performer, up 0.72%. On the macro side, the 10-year Treasury yield drifted slightly lower. Gold is sitting near $4,360. Oil continued its post-Iran deal slide, now in the high 70s per barrel. The Australian dollar is trading around 70.5 US cents. Bitcoin held above $66,000. One-line summary: the Dow and small caps up, tech down, and the whole market holding its breath for tonight. 3 things to understand. First, the Iran deal overhang. Monday's euphoria, when news broke that the US and Iran had reached a peace framework to reopen the Strait of Hormuz, drove one of the best single sessions of the year. By Tuesday, investors had read the fine print. It's a memorandum of understanding, giving 60 days for further negotiations. US officials say the strait reopens to commercial traffic by Friday. But some traders aren't convinced it'll be that clean, and the initial excitement cooled into cautious optimism. Second, tech pulled back, and here's why that matters. When markets are uncertain about interest rates, high multiple growth stocks are the first to get trimmed. The Nasdaq's pullback wasn't panic. It was rotation. Traders reducing risk ahead of tonight's Fed decision, moving out of the names most exposed to a hawkish surprise. Third, the Federal Reserve. Tonight at 2 p.m. Washington time, which is 6 a.m. AEST Thursday morning, Kevin Warsh holds his very first press conference as chair of the Federal Reserve. The rate decision itself is a near certainty. Rates hold at 3.5 to 3.75%, where they've been since December. Markets have that at above 97% probability. But the rate is not the story. The story is the dot plot, the Fed's projection of where rates are heading, and Warsh himself. Half of former Fed officials surveyed last week think Warsh may have to raise rates this year. The easing language that's been in every statement since late 2025 is expected to be scrapped. This is not your standard Fed meeting. Here's the sector rotation picture from Tuesday. Financials were the standout winner. Banks performed well in an environment where the market is pricing rates higher for longer, which is good for bank margins. Industrials and energy also held up. On the losing side, technology dragged, and consumer discretionary softened with it. The key signal: when financials beat technology, the market is telling you it expects rates to stay elevated. That's the message from Tuesday's session. Let's bring it home. The open direction: expect the ASX to open flat to marginally softer. The overnight lead is barely positive, and with the FOMC outcome still unknown until after our session ends, expect a cautious tone. Today's ASX is flying somewhat blind, and that's important context for how you trade it. Sectors to watch: ASX tech names will feel Tuesday's Nasdaq softness. WiseTech Global and Xero will be the ones to watch. They follow the Nasdaq's lead with a lag, and a 1+% overnight Nasdaq fall is enough to keep a lid on them today. On the positive side, the Big Four banks, Commonwealth, NAB, ANZ, and Westpac, could see support from the global financials rotation. Higher for longer rates are ultimately a tailwind for bank net interest margins. If Tuesday's Wall Street financial story translates to the ASX, the banks are your relative outperformers today. The commodity picture: oil continuing lower is a headwind for Woodside and Santos, both of which benefited from the energy price spike during the Iran conflict. Gold holding near $4,360 keeps Northern Star and Evolution Mining well supported. Iron ore and copper were broadly stable overnight. BHP, Rio Tinto, and Fortescue don't have a strong directional lead this morning, but they'll be sensitive to any Chinese demand data through the week. The Australian dollar at 70.5 US cents reflects the mild pressure of a hawkish Fed environment. For our resource exporters, a weaker Australian dollar is actually a margin tailwind. They price in US dollars and report in Australian dollars. The one stock to watch today: Commonwealth Bank. It sits right at the intersection of every major theme in tonight's Fed meeting: rates, financial sector rotation, and the question of whether Australian rates follow the US higher. The RBA meets in early July, and the Fed tonight is giving us clues about the pressure they'll face. Watch how CBA trades through the morning. 3 things to monitor during the session. 1. The clock. The Fed decision lands at 6 a.m. AEST Thursday, but ASX futures will start reacting in real time during tonight's press conference. If you're watching futures in the late session, that's where the market's first verdict on Warsh will appear. 2. Any update on the Strait of Hormuz reopening timeline. US officials say Friday. If that's confirmed or accelerated, oil stays under pressure and airline and travel stocks get a further boost. A delay flips that completely, and energy names like Woodside move fast on this news. 3. The Bank of Japan raised rates overnight to a 31-year high. Watch for any flow-through pressure on the Australian dollar and on ASX financials from that channel through the day. If this gave you an edge this morning, hit subscribe and the notification bell. You'll get this every weekday before the ASX opens, right when it matters. One question in the comments. Are you positioned for a hawkish wash tonight, or staying flat until the dust settles? Drop it below. I read every one.